Well, so I have no idea if I'm in frame or not because I'm an amateur. So this past week I took 0 trades and left feeling victorious. And that's because A, my 9 to 5 kept me busy throughout the week. So I couldn't engage the charts like I normally would. And also, this past week was NFP. And according to my trading plan currently, if an opportunity doesn't present itself Tuesday or Wednesday, I don't engage the markets until after NFP releases on Friday. And even then, on Friday, just conditions weren't clear to me. So I didn't trade. And that's okay. Even though the market went in the direction I thought it was going to go after NFP released, I didn't press the button. Because right now, I'm in the process of refining my edge. So your edge in the market is something that you absolutely have to have defined, even if it's rough, right? It doesn't need to be sharp now, but it has to be defined before you enter the markets, right? If you don't have an edge, you're gambling. You don't know what the statistical outcome of you engaging the market is. You are at the poker table, playing every hand. You are at the slot machine, pulling the slots, shoving your dollars in there, just hoping for a payout. But you don't have any data to back up any reason for you to actually have a payout. So that requires you to develop your trading plan, right? Your if-then statements for when you engage the markets. That if the market does this, then I do that. If the market presents an opportunity where I know that I have a statistical probability of ending a series of trades with a net profit, that is my edge. And so the question then becomes, do I push my edge or do I refine my edge? Now, there are arguments for both, but you absolutely need to know when it is appropriate to push rather than refine. So let's say after you've defined your trading plan, your edge, you've back tested it on the assets that you want to trade, you've forward tested it, and now you've collected enough data to know that you have some kind of statistical probability of engaging the markets and ending with a net positive P&L. And when you start, it has to be somewhat mechanical. It has to be, this is when I engage the markets, this is what I'm risking, this is where I am taking my profit, this is when I move my stop loss to break even, etc., so that over time you know when to engage the market and what is likely to happen over time. So you will have something like a 50% strike rate with an average return on risk of 2 to 1, right? So for every 1, you are making 2, and that you win those trades 50% of the time. That is a net positive edge. And so when the market presents an opportunity for you to engage, you know that you have an edge, that I have a statistical probability of leaving this trade over a course of time, over many trades, of being net positive, right? That doesn't mean that you won't run into snags like drawdown and losing streaks. And that's where your trading plan and your edge absolutely needs to enforce pushing, because that is the very moment that traders love to strategy hop, right? Or quit. And that is when you push your edge. If you've collected data, if you journaled your trade entries, if you know that you have a statistical probability of ending net positive, this is when you, A, need to rely on the data that you've collected to trust that you can enter the next trade and the next series of trades and the next year's worth of trades, knowing that you will come out of drawdown. It's after a larger sample size that maybe you can then discuss correcting or refining your edge. Because I think it's the case of this, that if you are at a point in time where you've had a small losing streak, right, or large losing streak, has your analysis and data supported this? Because it's possible that the likely reason for you being fearful is because you haven't done the back testing and the forward testing to prove that you have an edge, or you're over leveraged. You're sizing too big. Your losses are taking too big of a hit on your account sizing because you're not sizing properly. This has nothing to do with your edge, right? This has everything to do with your leverage. And so in these cases, I think it is appropriate to push your edge after you correct your sizing issue. But at what point is it more appropriate to refine your edge? So let's look at something that I've personally struggled with. I'm very tempted by being nimble in the markets and scalping, right? Getting small, quick chunks out of the market, multiple trades a day, being very active. It's very attractive, and it's very attractive for most people. They want to be, on the 1 minute or sometimes even lower charts, right? Let's say on average, you are trading every day the market's open, 2 to 3 trades a day. You got a 50% strike rate, and you're winning, 1.5 R. So for every one that you risk, you make 1.5. And if your analysis is correct, then yeah, you might think that you need to push your edge more, right? How much more could you push? You're already pushing the limits of how scalping works in the market to where the opportunities are conducive to that edge, in which you would be dulling your edge. So you push and push and push, and you trade and trade and trade, and you realize that you're forcing trades and you're not trading according to your rules anymore because you're trying to push your edge, and you are dulling your edge against the rock of probabilities. At this point, you need to probably refine your edge, where for me now, I don't trade every day. I trade on the days where I expect the most expansion. That gives me the highest probability of knowing that I have a bias for the day, that I can engage the market in a way that's going to offer greater reward to my risk more often than not. And so I place, on average, maybe 2 trades a week. And in last week's case, no trades. But I have a higher statistical probability of being on the right side of the market, that I can risk more and receive more reward. And I'm spending less time in the markets. My psychology is better. I have more time to live my life, and therefore I trade better. And I find better setups. And I'm not forcing bad trades. And I'm not pushing and leaving myself up to more risk and more leverage. And that is the benefit of refining your edge. And I think from a lot of the traders that I follow and listen to, that seems to be the trajectory. They are very attracted to engaging the markets and trading and scalping on lower time frames. And eventually it gets tiresome. You become mentally and emotionally drained, and they start backing up and zooming out into larger time frames and refining their edge and refining the times that they engage in the market so that they can make better decisions and be properly mentally prepared for it. I think that's where we all need to address our trading systems. When is it appropriate to push, and when is it more appropriate to refine? So I hope that was helpful. I know that's been helpful for me. I think in the next video, if anyone's interested, I'll go through rewriting what my trading plan looks like now as I'm refining my edge, and how to properly analyze what that edge is. And if that's helpful for any of you, then I would subscribe. Anyway, good luck and Godspeed.